Hey man, what's good YouTube? It's your boy K2 Analytics, and today we here with another video. I'm finna show you what the best technical indicators are and how to use them. Disclaimer: indicators, you must use them like with other things too. Like you need to know what's going on in the market. You need to know what the actual economy is going through. Like we in a recession, so most of the stocks gonna be going down for the most part. Understand that. You know what I'm saying? This is like October something. It's almost Halloween. Alright, today we're going to be going over the MACD, the RSI, the stock RSI, moving averages, and Bollinger Bands. Bollinger Bands is an indicator with 3 lines. The line in the middle is a moving average, and the top and bottom lines are standard deviation. The wider the top and bottom lines are, the more volatile the security is. When the top of a channel can indicate it being overbought, and the bottom can indicate it being oversold. I'll show y'all. Just a little example. Let me make it bigger for y'all, boy. Alright, see, look. See right here? They got 3 lines. 1, 2, 3. The top is the standard deviation, and the bottom are the standard deviation. The wider these are, see how wide it is right here? How small it is right here? That means right here is more volatile than where it is right here. And then this line in the middle, this is the moving average. And the one I'm using right now is 50. I'm using a 50 moving average for my Bollinger Bands. MACD, moving average convergence divergence. I'm gonna be honest, I use this, but this is like one of the last ones I use. Like it's a relationship between 2 EMAs. Like how I use it, I wait for the crossings of orders to enter the trades. Pink to dark green is bullish momentum, and light green to dark red is bearish momentum. So, like I said, pink to dark green is bullish, but we're in the bear market, so it may not. It really doesn't work all the time. But when it goes from light green to dark red, that's like normally an extreme drop is coming. So let me show y'all. So right here, you see pink to dark green. Slightly goes up. Like I said, we're in a recession. And then this is crypto, this is Bitcoin, so it goes down. It goes down, but like I said, it shows that it's going down because you see them little light green. Cause like I said, when it goes from light green to dark red, that's like bearish, or dark green to light green, that's also bearish. But as right here, you see it's going from light green to dark red, and it crosses down. You see how it has a lot of downside. Like I said, we're in a recession, so for the most part, you're gonna be looking for puts anyways. That's why these examples I'm showing y'all is put options. On a recession, it's October 2022. Almost Halloween, recession. Next one, relative strength index. This is one of my favorite ones. It measures the speed and magnitude of its trend, basically the strength of it. Tells whether the security is oversold or overbought. It's like the best indicator for following trends. It's displayed using a line graph. 30 and below is oversold, and 70 and above is overbought. Alright, this is the RSI right here. And 60 to 80, so in between that is 70. It's not marked on the graph, but anything above 70 will be considered overbought. And that means you do not need to buy. When it's overbought, that means it's going to be potentially going down soon. And then down here, you see anything below 30 is what you would call oversold. You see 30 like right here, and it was below 30 right here. So this right here would be considered oversold. Everything below this line, this right here would be oversold too. Be oversold, so it'll be some potential to go up. We are in the recession, so you see it goes up slightly. It goes up, but then it has way more downside potential. Like I said, we're in a recession, so things are more than likely going to be going down. But why I say I like using this for trend reversals, because this is a day chart. So normally when it's all the way oversold like this, it has no point. Like it has no other way, but it has to go up. Like down here, and when it hits all the way down here, you had this green candle up. Like if you like day trade and you caught this move up, you would've got some money out. You gotta get in and get out. Like right now it's a choppy market. It's not the time to keep your money in. Right, on to the next one, stock RSI. It's an indicator based off of the RSI. It's best used if combined with the relative strength index, what we just went over. It ranges from 1 to 100. Less than 20 is oversold, and more than 80 is overbought. So similar to the other RSI, stock RSI, the solo on the left side, then the start RSI, plus the regular RSI is on the right side. Cause like I said, it's not really that good by itself. But this is what it looks like on the left side. See, you know, they caught this move when it was maxed up out of here, and then it started going down. But you see, all the way in between that, it was down, it goes up. But then on the chart, it doesn't really do much. It's just a choppy market. But then you see, it does one little spike, and it goes all the way up and go down, but it barely moves. That's why you want to use the RSI to also help. Now look, when you look at the RSI, yeah, it caught this breakout, cool. Then it caught it when it was going down, cool. And you see it caught it when it was choppy. It catches it when it's choppy. The stop RSI doesn't do it. Like the stop RSI, like it's way faster and it's way smoother. So it's like you want to use the stop RSI based off of the regular RSI every single time. You see how the stop RSI, when it went up and then went straight back down, it caught it like sharp up, sharp down back to the previous level. See, it didn't do that for the stop RSI. Went up, went all the way down. See, stop RSI back in dramatic, it's random sometimes. Moving averages, man. A moving average is the price move usually represented by a line. This is my shit right here. This is what really made my trading go stupid. Moving averages can be can be used to find support, resistance, and trend reversals. All of them. Crossovers are the best way to confirm a trend reversal to me. Like I said, I ain't no financial advisor. To me, that's all to me. That's all how I do it. And then the best moving averages to me, the 9 to 12 for short term, and then the 250 for long term. These aren't in the they're not in no order. I just wanted to put them up there for y'all. Short term moving averages, the 9 to 12. Okay, so the 9 is normally the one closest to the actual price, and then the 12 is the one further out. The higher the number is that you're using for your moving average, the further it is from the security. And then the lower the number is, the lower the moving average is, the closer it is to the price of the security. So right here, the 9 is this purple line, and then the 12 is the black line. You see when it crosses, the trend goes all the way up. You see it goes up. Then you can catch it down. Like I said, what you want to do, you want to combine all these indicators together. As you can see, when it crosses, it started going down a little bit. Then it does another cross, start going up. Cross, down, cross, up. You see, and then this is another thing you have to do. You have to watch. Because when it crosses all the time, it doesn't do breakout all the time. You know, it's not very volatile right now. It's a very choppy market. You know what I'm saying? Like I said, it's close to Halloween. I'm just showing y'all the best indicators and how I use them. If you put these on, you'll be able to catch these trades because they do it more. Like it does it more, like a lot of times throughout the day. Like I said, this is a 4 hour. This is a 4 hour candle. You see how much smooth this is? Tell you better watch them candles. But then right here, you see it does not cross all the way. It bounces. When it bounces, like I said, it crosses, but then it bounces. That means that the trend is going up. That's what I mean by a trend reversal. You see how it keeps, like right here, it goes down and it stays down. See how the purple line stays below the 12? That means it's in the downtrend. That's what you want to know. That's the cross you need to look for. See, when it crosses like this, yeah, it trend reverses, but then it crosses again. Crosses, cross. But look, it crosses again. But when it attempts to cross and it just bounces like that, that's a good indicator. See how it breaks up like that? Them boys got excited. See, the sellers got excited. They said it right here. Then look, it goes down, and then look, it doesn't cross again. They got stupid. They got real. Man, them niggas got happy. They about to spark the blank. You see? And look, the trend keeps going up and it keeps going up. Now look, this is AMD 30 minutes. This is a whole stop. My favorite stop. Reverses, goes up. See, it tried. It ain't even get close to hit a reversal. But you see, the trend reverses, it stays up. It's not uptrend. Stays up. And it crosses down here. So like when it goes up, like when it gaps up like this, you're going to pull out anyways. I ain't gonna lie. Like if you make this much profit, you're going to pull out. But you see, it goes a long way down. Then it crosses down. But then look, right here, it tries to cross up down, but it doesn't. So it bounces back down. That means it stays in the downtrend. But now look, it goes all the way up, but it still doesn't cross. That's why you gotta wait for the cross. It goes all the way up, it still don't cross. Y'all see this? All the way up there, and it still doesn't cross. So it's still in the downtrend. Go back down, still in the downtrend, still in the downtrend. But look, it crosses right here. When it crosses, That confirms a different trend. And when it crosses, it goes all the way up and it stays up for a little minute. Then it goes down. And right here, you see it breaks, starts going down, and it crosses. Now another downtrend. You see, these are multiple examples. Y'all can see what it is. These are the short-term moving averages. Long-term moving averages. We got the 50 and the 200. All right. So the 50 is the blue line, and the 200 is the orange line. And you see these are on the weekly charts, weekly Bitcoin, the weekly SPY. And this is like long term. Like this is how people trading right now. Cause this is why it's a very choppy market. Cause we don't know if we're gonna keep going down or we're gonna keep going up. This is why, like, if you can trade right now, man, you're gonna be a GOAT when it comes to trading. When it just goes straight up like this for weeks, and I'll say I better be ready. Same for the stock market. When it just starts going up, it's gonna be over, man. That's why it's starting to do something. But it's starting to go back down. Cause we were trying to see how this last candlestick gonna play out, man. You know what I'm saying? But shoot. Summary, man. Bollinger Band shows volatility. MACD color changes can indicate a reversal. The RSI helps you follow a trend. Stock RSI is best used with another like the regular RSI. The moving averages can be used to find support, resistance, and reversals. You know what I'm saying? It's a break here, tune. I'm out of this bitch, man, for sure.